Hey guys, this is Richard Keats from Bank the Binary. How you doing? This is going to be a session regarding to technical analysis. We're going to touch a little bit of technical analysis. I'm going to call this video 4 out of 5 trade technique. 4 out of 5 trade technique. Why? You will find out short enough. Basically, this is a different technique that we're working with in binary options. It's a technique that you will understand how you can. You will have to lose one trade in order to know when this strategy is over and when you need to switch strategies. And until you will lose that trade, you will win several trades in a row. Let's just have a look at what technical analysis means. Okay. Technical analysis favors a microeconomic approach in which the only information given is any weight is former price performance of a given asset. The central thesis of technical analysis is that all you need to know about an asset is present in its current price. Technical analysts also believe history repeats itself, hence the focus of historical data, and that price action occurs in cycles of trends which can be used to predict future movements. Yada yada yada. What this means basically is what happened on a specific asset will happen again. For example, if I'm right now looking at a graph and I'm putting a high resistance and support, highs and lows, and I am basically establishing a high resistance by getting hit 3 times in the same point and a low by getting hit 3 times in the same point. So right now we're looking at the Euro USD. This is the channel. This is called a sideways trend. Sideways trend because it's going sideways. It's not going upwards or downwards. It's going sideways. And this is very basic. What we have here is a sideways trend which is basically hitting a very clear resistance and a very clear support. You may think it's here. You may say, hey, but the support is here. Well, no. This is not the support. The support is here. This is a weak support. This is your support right here, because we are looking at a chart where it's a candlestick chart, of course. Every line like this in red or blue is called a candlestick, and every line like this represents 5 minutes in this specific chart, because I'm looking at a 5-minute chart. You cannot see it, it's outside the screen, but it's a 5-minute chart. All right, 4 out of 5 trading technique is basically when you are understanding the channel. If, for example, right now you are here at this point of time of the market, you cannot see basically what's going on after here. So basically you will know that it's from here. Okay, sorry about that. Basically you'll know it's going on from here, and then you will establish resistance and support. Okay, and sorry about that, just a second, I got a client online. All right, thank you for holding. I apologize. Anyway, basically, once you get to this point, you will understand that this is the resistance, this is the support, and then you can start trading. So what you're going to do is you're going to place a down trade here. I'm going to zoom in, and you're going to place a down trade here until it hits the support, and you're going to place an uptrend here. That means a put and a call. I have prepared one a little bit more self-explanatory, where you can see here downtrend, uptrend, downtrend. These are 3 trades. Okay, gold trading between 1280 to 1288. So you know that this is 1288, 1280. If it hits 1280, it's going to go up. You're placing a call. If it hits 1288, you're placing a put because it's going to go down. By the way, we did not talk about it, but Forex traders, if you're watching us right now, this technique will not work in Forex. Statistically, it will not work in Forex because Forex traders usually trade outbreaks. An outbreak is what we have right here. This is an outbreak, when basically the asset is testing the resistance several times and then it breaks out of the resistance. Okay, this is called an outbreak. This is where a Forex trader should buy the currency. Okay, and he should sell it when he sees it start descending, because once it starts descending, it's going to go back to the same resistance and support. Unless, of course, this outbreak starts repeating itself several times, then it's going to establish a new resistance and a new support. But here we're seeing a very clear resistance, very clear support, and one outbreak. But we're not Forex traders, we are binary option traders. We like our life much easier and much more comfortable and much more secure. So we're looking at 1, 2, 3, 4, 5 even 6 here that I missed, 7, 8 trades. Okay, why is it called 4 out of 5? Because we're going to place several trades, let's say 5 trades on one trend, 1, 2, 3, 4, 5. But the 5th trade will basically be out of the money, because in the 5th trade it's going to break through and keep an uptrend, or it's going to keep the downtrend, whatever happens. At some point of time, the asset is going to break the resistance, or going to break the support. And that breakout is going to cost us to lose that trade. But we won 4 trades before that. That's why it's called 4 out of 5, because you're basically trading one here, and you're trading one here, and you're trading one here, you're trading one here. Suddenly, this trade right here, I can't show you with a pen here because there's no such tool in this chart, but basically in this area you will lose the trade, because when it hits here you will say, hey, it's hitting the support, it's going to go up, so you're placing a call trade, and it's going to keep going down, so you lost that trade. But all the trades before that were in the money. So you can see here that you have several trades that you can make in the money, and one trade that will cost you out of the money. That's why we go small. We go 5% in case that that trade is actually the trade you just took, and you don't want to lose too much. So you're taking one trade 5%. If that trade looks very successful, let's say right now you took it here going down, and you see that, wow, it keeps going down, it keeps going down, I'm going to win this trade. Don't be afraid to double up. Take that trade again. All right? Got it. Thank you. Call you. I'll call you. Cheers, guys. All right. So this is a trade where you can actually double up, take it several times. Okay, and that's basically, listen, this is on the tip of the iceberg, but technical analysis has thousands of different aspects. Right here, what we're talking about is a strategy called 4 out of 5. And this is a very good strategy, very convenient to making money from technical analysis. Like I said before, technical analysis can get you to about 69 to 72% winning rates. I don't think it can take you much higher than that. You have to rely also on fundamental analysis in order to get the full picture, because something happened here. This is not happening just because. This has a reason. So if you know these reasons, if you're following the market, if you're keeping your eyes open and your ears open, you will know that this is going to happen and you're not going to lose that trade. So you can do 5 out of 5. All right? I was Richard Keats. Thank you so much for watching. Have a beautiful day and good trading.